Hey, what's up? What's up, my friend? So welcome back to another week of our weekly market analysis. And first thing first, I want to welcome, if you're from India, right, traders from India, I want to welcome you into my weekly market analysis because I've noticed, right, there's quite a bit of traders who are India who are actually watching these videos on a weekly basis. So welcome, right? So yeah, I think I wanted to do, the Nifty market this week, but what happened is that when I tried to load the chart on that particular platform, the Nifty just, didn't come up. Maybe it's on a weekend, right? The data is, they're fixing it or something like that. So I couldn't get it out, but what I'll do is that if you are on my Facebook group, I'll try to post a Nifty chart and share with you my thought process on it. Okay, so that's it. Back to this week's market analysis. I want to share with you an important lesson on, I would say, thought process, right? Because sometimes you put on a trade, it goes in your favor, and then it starts going against you and stop you up for a loss. So you take the loss, all is fine and well. But when that same trade starts going back in your intended direction, that is where, your mental just goes haywire. Okay? So I believe you can relate to this, right? So I want to talk this, right, in this week's market analysis and share with you what are the things that you should do, right, when such a scenario actually happens. So all this and more in this week's market analysis. I'll see you there. Okay, so the first thing that I want to talk about is this dollar-yen trade, right? For those of you who have been following me, I was short dollar-yen and I got stopped up early this week. And the trade aside, right, I think there's a very big fundamental lesson that we all can learn from this, right? So let me just share with you a brief recap on why I went short on dollar-yen. So if you look at this, right, you can see that it formed a massive head and shoulders pattern over here, right? This is the left shoulder, the head, the right shoulder, followed by this neckline over here. So when it broke the neckline, I was bearish on this pair, right? So this is just very basic classical technical analysis. So that's it, right? I didn't go short over here, although I wish I did. So where I went short instead is actually at this consolidation over here, where you have seen this, I think this slight descending triangle. This is the area of support. So I went short when it broke below this area of support, right? After all, it has just broken out of the neckline on the massive head and shoulders pattern. We have this consolidation pattern that shows you lower highs in the market, right? Showing you that there is potential weakness towards the downside. So I went short over here, and you can see, price went in my favor, right? So it was a pretty easy trade to start with, right? So just to let you know, I went short when price break and close below the area of support. I had a stop loss of 2 times the average true range, which I believe is somewhere, I think about here, right? Based on my own memory. I think it's somewhere around here, this level over here. So it went in my favor pretty quickly, right? Very easy trade. So I'm up about 1 hour or so. And then price started to consolidate and spike higher coming into Friday's close. So at this point in time, what happened is that when the market was trading at this point over here, I was actually trailing my stop loss using the 20 period moving average, which is this red line over here. Because you can see that it has acted as dynamic resistance, right? The 1 time, 2 time, 3 time. So it made sense, right? If I were to, if price were to close above it, it would probably be telling me that I'm wrong, right? And I should, get out of the trade. But at the same time, I was also prepared to re-enter the trade if you were to be able to close back below the 20 period moving average. So what happened is that on Friday, we have this very big close higher. And what happened is that, on Monday, I think it was trading somewhere here. I tell myself, right, I'm clearly, right, price has, hit my stop loss, my trailing stop loss, which I've, trailed manually, and I look to get out of this trade. So that's what I did, right? I followed my plan. And few days later, what happened next is that, we have news from the BOJ that led to this spike lower. So I think this was on Thursday, this is on Friday. So at this point in time, right, imagine the thought process of most newer traders. They'll think along this line, say, man, I exited at the highs over here, right? I exited my trade at the highs over here, right? Then they blame themselves, right? They say they're stupid. They blame that, their system isn't working. And they just feel really lousy about themselves. Because after all, who likes to, exit your trade for a loss and someone is right at this high over here? You're going to feel really lousy. Am I right? I'm sure you can agree with me. So yeah, I think this is what a lot of new traders will face. But I'm here to tell you that if you followed your plan, right? If your plan from the get-go, from the start, is to exit your trade the moment it closes above the 20 period moving average, then you've done a good job. right? I will say that is a good trade, even though it is a losing trade. For me, in this example, I had a loss of about 0.7R. It's a losing trade for me. But if you ask me whether is this a good or a bad trade, I will say it's a good trade. It's a trade that clearly I've followed my plan, right? You shouldn't let this outcome of this trade affect whether this is a good or bad quality trade. Because think about what could happen. Let's say, for example, instead of, the news that, led to lower prices over here, what happens is that, let's say the news came out the opposite effect. It rallied higher over here, right? Then it closes higher. And then you say, oh, wow, I made a good trade, right? I exited, I followed my plan, and I mitigate the further losses, right? I cut my loss, it's a good trade. It doesn't really make sense, right? Because you are basing the quality of your trade based on the outcome of the trade. Am I right? It doesn't really make sense to determine whether a trade is good or bad based on the outcome. Because in the short run, your trading results is pretty much random, right? Go read up the law of large number. Your trading performance is pretty much random. So one trade, two trade, it doesn't really mean anything, right? What it means, right, instead, in the grand scheme of things, is that you want to follow your plan day in and day out, right? Don't judge whether this is a good trade, whether this is a bad trade, based on this random outcome of any one trade, right? It doesn't make sense, right? So if you followed your plan and if you get stopped out, it's a good trade, and pat yourself on the back, on your back, right? Because you clearly followed your rules. Okay, so I hope this trade gives you a reality check, right, into what can happen in the markets, right? You can follow your plan and the markets make you look like a fool. It happens, right? It happened to me, right? I've been trading over the last almost 8 years and it still happened to me. And if you can't take things in your stride, then you probably have no business trading. Okay? So that's it, right? I think this is a really important lesson and just want to bring it out across. So that's it, right? This lesson aside, let's share with you, some other markets that I'm currently looking at. So this market, I'm looking at this, right? This is gold. This is the weekly time frame. So I'm really pumped up about gold, right? Why is that? So if you look at a gold weekly time frame, you can see that chances are, right, the downtrend is over, right? You look at the weekly time frame, it traded almost to a high of almost $2,000 and slumped down all the way to the lows of about, I think, close to $1,000 over here, right? 50%. It dropped almost 50% over the last, close to 50% over the last, I think, 3 to 4 years, maybe almost 5 years. All right, so why I'm starting to turn bullish on gold is, if you look at just basic structural technical analysis, we don't even need to use any fancy indicators, right? Nothing too fancy, right? Although I have 3 lines over here. This is the 200 period moving average, this is the 50, this is the 20. But honestly, you don't really need them, right? Because why? If you look at this based on a structural approach, you know that in the downtrend, it has been making a series of lower highs, right? You have lower highs, lower highs, lower highs, lower highs, lower highs, lower highs, lower highs. I say that until my throat is dry, right? And if you want to talk about lower lows, you pretty much have, okay, these lows are pretty much the same. Another lower low, right? This is the same lows, another low, another low. So it's very clear the trend is down, right? Just apply basic technical analysis, right? You open up any textbook, they talk about higher highs, higher lows, lower highs. You can conclude that this is a downtrend. Right? So where is the key thing that, switched my bias from the downside to neutral and now finally towards the upside, right? The key thing that actually intrigued me, or say, that piqued my interest, was when it broke above this swing high over here, right? This is based on a weekly time frame. So this swing is definitely very prominent on the daily time frame. When it broke above it, it's telling me that, the downtrend could potentially be, getting weak or, possibly be over already, right? So then it started to consolidate over here. So at this point in time, right, I'm thinking to myself, this would either be a very steep retracement in a downtrend, or it's going to be the start of a new trend, right? So this was actually this congestion was a key area to me, right? If you look at it on a daily time frame, it basically looks like this, right? This head and shoulders pattern over here, right? You can see this head and shoulders pattern. This is the left shoulder, this is the head, this is the right shoulder. So this congestion was key, because if you were to break below this neckline over here, then chances are we can expect lower prices to come. And that will look like the trend continuation based on a weekly time frame. Because if you break below this neckline, chances are the trend would continue. But what happens when it break above this high? Right? It's telling you something, right? It's telling you that there is bullish pressure to actually, push price higher. And if you look at the daily time frame, those who traded this head and shoulders pattern, where will they put their stop loss? They'll put their stop loss above this high, right? So at this point in time, those traders who went short, I can tell you they are feeling the pain right now if they have not cut their losses, right? So as a trend follower, how can you take advantage of these traders who are feeling the pain right now, who refuse to cut their losses? You go long, right? You go long when price break above this swing high over here. And this is what I plan to do on Monday open. I intend to go long. And the open, right, depending, where it opens, maybe open somewhere here, or if there's a gap up somewhere here, whatever. I try to get, the closest price towards this close over here on Monday when gold opens, right? I'll look to have a stop loss of 2 times the average true range, right, which is, I think, I'm guessing somewhere over here. I haven't really pull out my indicator to measure it, but I'm guessing somewhere here for my stop loss, right, in anticipation that gold would have further upside. Right? Could I be wrong? Of course I could be wrong, right? Honestly, if I'm so confident of this trade, I'm going to bet my entire house, the mortgage, take a mortgage and bet on this trade, right? Of course I'm not 100% confident, but I know that, if I take this kind of trades over and over again, right, it yields me a positive expectancy. So I do not know whether it's going to be a winning trade or not. This is why I raised a fraction of my account, right? I have a stop loss in place, right? If it works out, great, right? This could be possibly, right, just a possible scenario that maybe if this is the bottom, we could, go back all the way back towards these highs over here, almost, $2,000. So this gold trade, I'm excited about it, right? And I'm looking to trade it, right, based on the breakout on the daily time frame. So again, right, I don't trade all breakouts, right? You really have to look at the big picture, right? Or what I talk about, the context of the markets, right? If you trade a breakout towards the upside when the downtrend is still clearly intact, then honestly, that is a low probability trade. But if you look at the higher time frame context, you see that the downtrend, is starting to get weak, right? Because the previous highs has been taken out. Then, hey, the context of the market is changing, right? It's now favoring, that the bulls have, the upper hand. Okay, so I hope this is a setup that I want to share with you, and I hope, you be responsible for your trades, right? Disclaimer here, right? I won't be responsible for your wins or losses, right? We're all mature adults. Maybe some of you are, pretty still studying or whatever. It's your money, it's your call, your responsibility. Okay, that's it. This is my goal that I want to share with you. Another market that I want to share with you is the dollar against the Swedish krono, right? Swedish krono sounds pretty cool. Swedish krono. Okay, so Swedish krono, you can see the dollar against the Swedish krono. It's in a massive, right? Well, based, in technical analysis term, this could be a potential distribution phase, right? So basically, you had this long bull run over the last, I think, 1 or 2 years. Then it started to consolidate for a really long period of time. I think, 1 year plus. I think, for quite a long period of time. So this level is key because if price were to break this area of support, look at where is the next target price could potentially, find buyers. It's until here, right? This area, previous resistance, turn support. So he has pretty much a very long way to go lower. Right? For those of you who study, classical technical analysis, they can do a projection from this high to this low, and they project it lower. So I think it's, again, right, aligned somewhere around this previous resistance turn support. So there's a potential big move coming in, right, in the dollar against the Swedish krono. And again, right, I'm looking to short this market towards the downside, right? At this point in time, traders say, Reina, are you crazy, right? The market is so low, right? Why you want to sell when it's so low? Right? Aren't you supposed to sell high and buy low? Hey, come on, right? You can buy low and sell high, and at the same time, you can buy higher and sell higher. Or in this case, I'm currently, selling low and intend to cover my trade even lower. Alright, so there's really, there's more than one way to skin the cat, I'll put it across, right? So in this scenario, right, I'm looking to short the dollar against the Swedish krono. And again, am I, 100% confident this trade is going to work out? Of course not, right? So this is why I always have my stop loss in place. I raise a fraction of my account, and I think these are pretty much stuff I've been repeating, since the days I started, doing this weekly market analysis. So if you understand where I'm coming from, right, and good on you, right? You probably understand the principles, the message that I'm trying to put across, right? If you are new to this and this is something still foreign, right? Don't worry, right? Watch this video every week, and after 6 months, I can guarantee you can think like me, you can trade like me, and you probably act like me. Okay? So, yep, that's all I have for you in this week's market analysis. I hope I managed to share something that could resonate with you, right? If it makes sense, if it helps with your trading, I'm really happy because that's what I seek to do. Okay, so if you have any questions, any doubts or queries, feel free to leave it in the comment section below. With that, I wish you good luck and good trading. Talk to you soon.